Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So this is going to be an update video on A2 Milk. I'm not typically one to focus on sort of individual year performance, but there was some big news that came out of the A2 Milk company just last week around quite a significant downgrade to their earnings guidance for the next year. So there's kind of going to be two parts to this video. The first part is just going through the actual news that came out of A2 Milk, and the second part of the video is basically going to be sitting down and updating some of my valuations that I've done in the past on this particular business. Now, if you're interested in sort of seeing a full analysis from me on A2 Milk, I did do a video on that only just a few weeks ago, which went right through what the company does, what I think their competitive advantages are, if any, what the management team was like, and some valuations at that time. And we're sort of just going to be updating the last part of that analysis in this particular video. So feel free to go check that out if you want to see a full kind of overview. But for now, let's get straight into the video. And just for full transparency, I'm not exactly sure when this video is going to come out, but I'm filming this on Sunday, the 20th of December. So chances are A2 Milk may have traded a little bit after filming this video, and the price may have moved around a little bit, but hopefully this video is still of a lot of value to you anyway. Okay, so on the 17th of December, the A2 Milk company put out a market announcement to the NZX, basically requesting a trading halt. Now, trading halts are fairly common in both New Zealand and Australia, and it basically is when the company has quite significant news that they want to announce to the market that they think will have some sort of impact on the price of the shares trading for that business. So they sort of halt trading until they're able to put out a press release on that news. So that came out on the 17th, and they basically said the trading halt will remain in place either until the release of an announcement by A2 Milk or by market open on Monday, the 21st of December 2020. So that came out on the 17th, and then the following day on the 18th of December, A2 Milk did put out another market announcement, another press release, and it was titled Updated First Half 21 and FY21 Guidance. And the press release sort of walked through some of the issues that the A2 Milk business is having, particularly due to many lockdowns all around the world and some of the sort of supply chain issues that kind of causes for the A2 Milk business. And it's interesting because A2 Milk had only downgraded their guidance. They've already done it kind of only a few months ago, and this was sort of a further downgrade again. And it was quite significant. So they did talk through a lot of the issues kind of driving some of these problems in the press release. I'm not going to focus on that too much in this video. Rather, I'm going to skip right through to some of the financial implications for this particular year. Okay, so here are the updated numbers that the A2 Milk company just put out. So they said, we now expect group revenue for first half 21 in the order of 670 million, noting that second quarter 21 will be higher than first quarter 21. So if we firstly compare that 670 million for the first half, in their previous guidance update from September, they said that that would be in the range of 725 to 775 million. So quite a significant downgrade there. They also said group revenue for FY21 of 1.4 to 1.55 billion. Again, if we go back and compare that to the September update, they said that they expect that to be 1.8 to 1.9 billion. So we're having close to $500 million in revenue kind of drop out from the business there. And the other thing they said is group EBITDA margin for FY21 of between 26 and 29%. Again, if we compare that to their previous press release, they said group EBITDA margin for FY21 in the order of 31%. So in terms of financial performance for the A2 Milk company over the next year, they've kind of got the worst of all worlds here. They've got both a decrease in revenue, which is driving a decrease in EBITDA, and they're also keeping less of that revenue as sort of EBITDA margin. So they're not only bringing in less money on the top line, they're keeping actually a smaller percentage of that out the bottom line for, owner earnings for shareholders. And they also mentioned here that there is an unprecedented level of uncertainty and volatility in market conditions as a result of COVID-19 and foreign exchange headwinds. So very uncertain times for the A2 Milk company. The business is now not going to earn as much money in the at least short term over the next sort of year or so. So I want to go through and see how that impacts the intrinsic value for the A2 Milk business. Anytime we're buying into a company as value investors, we want to compare the future cash flows of the business relative to the price that we have to pay today, and then try and come up with a return that we expect to make if we were to purchase those shares today. So I want to go through and see how that is going to impact the performance for A2 Milk. Look at a couple of different scenarios. What happens if this is a short-term event that A2 Milk can then bounce back from quite quickly, versus what happens if this is, more of like a medium-term event, which takes a couple of years for A2 to recover from. How does that impact the valuation in each of those two scenarios? So let's jump over to the computer and have a look at that now. Okay, so we're over at the computer now, and this is the previous valuation that I showed a few weeks ago when I did sort of my A2 Milk analysis. So at that time, I guess basically the assumptions I had was that the first year of free cash flow was around $400 million. I was expecting a growth rate in free cash flow of 24% a year for the first 5 years, which is a big growth rate, but I thought that was sort of a reasonable expectation. I then had that dropping to about 10% over the following 5 years, and I was expecting that we could sell the A2 Milk business for 15 times free cash flow in sort of year 10. So that's all the numbers I was kind of using to come up with my free cash flow figures, as you'll see in the column here. The only exception to that is I did have sort of an override in year 2, which is for FY21, which I was using based off the previous guidance that A2 Milk gave. So that's sort of where I was sitting with A2 Milk beforehand. I've made one change here, which is to put in the current market price of, or the current enterprise value of about $7.3 billion. I've put that in now after the A2 Milk decline in share price. So on this news, A2 Milk went down over 20% in a day. So that is the updated enterprise value. And I guess if nothing had changed with the business, that tells me that we're at close to a 40% discount to intrinsic value, assuming that the business was still going to earn the same amount of money I expected it to when I first made that video. But obviously things have changed, so let's kind of talk through that component of it. So here I have some of the updated numbers. Now, up the top here, these are the 2020 revenue and EBITDA numbers, and then also the guidance that A2 Milk came out and gave in September. So that gave us about 7% growth in revenue and about 4% growth in EBITDA. And that's a lot lower than the growth that A2 Milk has achieved in the past, and that's kind of why there was some negativity around the stock at that time. And with the new guidance, we have dramatically lower growth again, to the point where we've actually got a decline in revenue and EBITDA for the first time for a very, very long time for A2 Milk. So we've now got about a 15% drop in revenue expected versus 2020, and about a 27% drop in EBITDA versus 2020. So we're definitely going to need to update some of our numbers in our discounted cash flow. Okay, so the first scenario I'm going to give you here is certainly the most optimistic possible valuation I can do. So definitely take these figures with a grain of salt, and take all my figures with a grain of salt. Don't make buy or sell decisions off what I'm doing here. So basically, in this really optimistic scenario, essentially what I've done is I've reduced the 2021 earnings or free cash flow number that I've got in here, and I've kept my previous forecast for year 3 and then sort of grown that out into the future exactly the same as it was before. So this scenario is essentially saying, we expect A2 Milk to have these poor earnings in 2021, and then after that we expect them to return to this, stellar 24% a year kind of growth. And if they can achieve that, that really hasn't changed our intrinsic value all that much. We've gone from, I think a 39% discount to intrinsic value before to a 38% discount in intrinsic value now with that minor change. And that's basically because A2 Milk is a company that's expected to grow a lot over time, and a lot of the valuation for this business is on those sort of longer term back end cash flows. So the nearer term cash flows, the cash flows in the next year or 2 or 3 years, aren't going to have a massive impact on the business, assuming that we can still reach those larger cash flows out into the future. So that's scenario 1, and that's certainly the most optimistic scenario. But with my valuations, I always like to be a little bit more conservative, particularly with these faster growing companies, because as you'll see in a sec, anytime that we have a really fast growing company, we are very, very reliant on that growth rate. If they don't get to achieve that growth rate out into the future, we can have a massive change in intrinsic value very, very quickly. So let's look at that scenario next. Okay, here we go. So in this case, what I've done is I've still put in my $320 million of cash flow for next year. If you're wondering how I arrived at that figure, basically I'm taking my first year free cash flow and then subtracting that kind of percentage drop that we saw earlier. So I'm sort of averaging out these two numbers of 15% and 27% and saying that, you know, the average of that, so in and around sort of 20% or so, is about the decline in free cash flow that we're going to get in that sort of 2021 year. And then what I'm doing after that point is I'm going to say that from that point onwards, then A2 Milk is going to, again, get back on track to growing at that 24% a year, but it's going to be doing it off a lower base. So it's going to sort of drop to this 320 million in cash flows, and then it's going to grow at 24%, you know, on that 320 million. So it's not necessarily going back and growing our first year out sort of into the future. We have this dip, and it doesn't necessarily bounce all the way back very quickly, but it does sort of grow off that lower base at a high rate again. And if we make that change, we still see a discount to intrinsic value, not the big kind of 50% we're necessarily searching for, but we've got a 20% discount to intrinsic value still, even with that slightly more pessimistic scenario. Now, the final scenario that I want to run in this case is to try and sort of work backwards and figure out where the market is sort of expecting A2 Milk to go by kind of working backwards with some growth rates. So in this case, I'm basically going to mess around with my growth rate in years 1 to 5. And if I, you know, push this way up to 30%, for example, that's going to grow the free cash flows and the earnings of A2 Milk into the future, and it's going to push the intrinsic value up. If I drop this to, you know, a 0% growth, then suddenly we're going to have much lower cash flows in those first 5 years. It's going to drop the intrinsic value, and now A2 Milk looks sort of 40% overvalued. So I'm going to do a bit of trial and error here and just try and find, you know, what sort of growth rate lands us on about intrinsic value being the current market value, if that makes sense. So that's kind of a way of us finding what the current sort of market expectations sort of are for A2 Milk. So if I play around with some numbers here, say 15%, 14%, then we land on 0, or near enough to 0% difference in our intrinsic value. So I guess in terms of current market expectations, if you work backwards based off the price and the sort of other assumptions I've made, the current market expectations implied through the market price of A2 Milk is basically saying that, you know, if A2 Milk hits their new guidance that they've just given us in the past week and then grows at about 14% per year after that, then it's probably priced about right. So if you're someone that's looking to make an investment decision here with A2, and again, don't take this as financial advice, make all your own decisions, do your own research, all that sort of stuff. But if you're someone that's looking to make a call on A2 Milk, if you think the business can bounce back from that and grow, you know, at more than 14% a year, then A2 Milk is probably undervalued. If you're someone that doesn't think that A2 Milk can bounce back and you don't think it can achieve that level of growth, then probably A2 Milk is overvalued. And I hope these valuations have been very useful to kind of show you some of the different levers that we can kind of pull to run some different scenarios here with valuing this particular company. Okay, so there you have some updated valuations for the A2 Milk Company. This is a really interesting scenario. I talk about it kind of all the time on this channel, that I'm often looking for really high quality businesses and putting together a watch list for them, and I'm kind of waiting for them to kind of stumble in the short term. And this potentially is one of those textbook scenarios, but it's potentially not. And you really have to make a call based on your research, whether you think this is a short-term event for the A2 Milk business or a long-term event. Really none of the scenarios we ran got us to that big 50% margin of safety, but a couple of them got us very, very close. And some of them gave us absolutely no margin of safety if you think that A2 Milk isn't going to grow all that much into the future compared to what it's done in the past. So really interesting scenario. I'd love to hear your thoughts on this down in the comments below. Are you an A2 Milk shareholder? Are you buying it? Are you selling it? Let me know your thoughts and kind of what you're doing. But I do hope you enjoyed the video. That's it from me today, and I will see you in the next one. Cheers.